updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Down day for the U.S. equity market as Fed speak dampens hopes for a pivot. We've got the S&P down 25, drop there of 0.7%. The Dow down 94, down 0.3%. NASDAQ down 75, a drop there of 0.7%. The 10-year yield 3.78%, with the 2-year yielding 4.45%. Spot gold down $13 the ounce to $17.60, a drop there of 0.8%. And West Texas Intermediate crude oil is down 4.6%, $81.68 a barrel on WTI. Earnings this morning from Macy's. That stock surging now by 12.5%. Also reporting this morning, Kohl's Corp. Its shares are up by 3.4%. Again, recapping, stocks lower. S&P 500 index down 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as travelers get ready, like Tim, to take to the air as the holiday season gets underway, our Alan Levin in the new issue of Bloomberg Business Week takes a look at the glamorous air charter market, the dark corners of that market, that is. This story, by the way, also the Bloomberg Big Take.
Are you implying that I'm going to fly on a private jet somewhere for between $40,000 and $70,000 for a round trip between the East Coast and the West Coast?
Whatever works for you, Tim Stanovic.
Right. I'm not going to be doing that. And especially after reading this story, I think it raises a lot of questions about what the charter industry looks like. We've got Joel Weber, the editor of Bloomberg Business Week, with us in the Bloomberg Interactive Broker studio, and also Alan Levin, aviation safety and FAA reporter for Bloomberg News. He joins us on the phone from our Washington, D.C. bureau. Joel, I want to kick it over to you and just make a distinction at the beginning of the conversation about how we define illicit charter flights. Because the definition is, it's kind of murky, right?
And that's why I think the story is scary, all right? Like, I think people are getting on planes that they assume are fine, and in the worst case scenarios, as Alan's reporting shows, learning in disastrous ways that they're not. And it is murky, and that's, I'll let Alan actually take the question in terms of like illuminating the very specific question that you have. But the bigger thing to me is just, I think there are private aviation has become almost sort of the shadow world that is very attractive. You can get places far easier, and all you need is a little bit more money than flying via a normal one. And it has, Alan's reporting here reveals that it comes with a host of problems and worries. Alan?
Yeah, that's correct. And you know, in our world today, you assume when you get if you call an Uber or you get in a taxi, that it's sort of been vetted by the government. It's not perfect, but at least you know they're looking at it. And I think that assumption carries over into the charter world, not least, at least in part, it's due to the fact that there are lots of apps you can get that will get you a charter flight, and so people just assume it's the same thing. But unless you know what you're doing, it's really hard to tell the legitimate operators from the ones who are not licensed and in some cases are really cutting corners on safety.
I'm sorry, I'm just having like FTX flashbacks.
I was just going to say, in a world of like
regulators and like,
accountability,
okay, it works here, accountability. You assume that because it has a fancy app that, and that it has ads, that it's going to be okay.
Right.
So this is really interesting.
Exactly.
There's this part in the piece, Alan, and you have just some really heart-wrenching examples. Marcy Wilhelm is somebody you spoke to for the piece. Tell us about her experience flying privately.
Yeah, let me just start by saying I've been covering air crashes for a couple of decades now, and this is really one of the most heart-wrenching ones. Marcy was amazing, had an amazing success story. She had co-founded a healthcare company, and they'd sold it for almost $200 million. This was back in 2018. She'd been hired to be the CEO of the successor company, and she was going away on a long weekend to Nantucket with some friends from her house in Florida. They stopped in South Carolina to pick up some folks, and the plane essentially did not have brakes, and it's a fairly big corporate jet with high speeds compared to some other planes, and it just went screaming off the end of the runway down an embankment and broke into pieces. It killed both pilots, and Marcy and her husband were both severely injured. And what investigators came to learn very quickly was that the plane never should have been in service on many different levels. For one thing, Marcy booked the flight on a legitimate charter operator, but they're required to put each and every aircraft on their certification. This aircraft was not. But beyond that, it had dozens of maintenance items that weren't complete, and most notably the brakes. And the most stunning thing of all is a mechanic had noticed that the brakes weren't working, had put a bright orange placard, kind of a sticky note, if you will, on the brake panel right in front of the pilots' faces that said inoperable. Technically, it said inop, which is whatever, that's what everyone in aviation they should know what that means. And they still landed without the brakes and had this accident.
How is this happening still in the year of our Lord 2022? Like how and why? What are the blind spots here?
So, in the legitimate air charter world, I don't want to leave listeners confused. In the legitimate world, there is a ton of FAA oversight. It's not perfect. Occasionally we see flaws, but they're required to do everything from pilot training to drug testing employees, on and on and on. But there's a good 20,000 or so private jets that are privately owned in the U.S. And let's say you're a business and you bought this jet, and suddenly the costs of maintenance are adding up. You might say, well, geez, why don't we just rent it out, to somebody? And if you do that, you're not following all those safety measures that the legitimate guys do. And from the outside of the plane, it's almost impossible to tell the difference.
And I guess I'm just wondering, why does it all fall through, the hands of regulators or the FAA ultimately? But I can see where the cracks are. So what's your advice to folks out there who might be interested in chartering?
Well, it turns out the FAA, partly in a reaction to this, a few years ago, began publishing a list of all the aircraft that are legitimately licensed to carry people for hire. So you can look that up. You have to if you Google FAA air charter safety, you'll find a link to it. There's a trade group that has been very involved in this as well. And there are also several private companies that do auditing of charter companies to sort of save the customer the hassle of doing that. And so there are definitely ways to figure out who's legit and who's not.
And we teased earlier that there's a connection between Jamie Foxx and a big
Whitmer,
Hollywood producer, Peter Gruber, also the NBA and I think the NHL. So highly recommend that you check out this story in the upcoming issue of Bloomberg Business Week, also on the Bloomberg Terminal and at Bloomberg.com, because it's a really important one and a lot of detail there from Alan Levin, our aviation safety and FAA reporter. Alan, thank you here at Bloomberg News. And our thanks to the editor of Bloomberg Business Week, Joel Weber, as well. All right, coming up, we're going to catch up with our TV colleagues, talk a little bit about the market trade today, the latest Fed chat and conversation that's coming your way right here on Bloomberg.
Welcome to The Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes to go in the trading day. Romaine Bostic here alongside Scarlett Fu. We're joined right now by our colleagues Carol Master and Tim Stenovic. We welcome our audiences across Bloomberg Television, Bloomberg Radio, as well as on YouTube and Quick Take. Carol, another day of declines here for the S&P and really the broader market as a whole.
Yeah.
I don't know, maybe some of those comments by Jim Bullard putting people on the back foot.
Yeah, we're going to talk about that in just a bit. This is why, all right, don't judge me, don't throw tomatoes at me, but I continue to look at those Chinese names that trade in the United States. Because outperformance, once again, they're up about 3
This is what I like about you, Carol. You're reliable.
Somebody you got to count on. All right, so the NASDAQ Golden Dragon China Index up 3.6%. But you know what, Romaine? It is up about 36% since October 24th. So some of the reasons why, you've got Alibaba rallying. That is up about 7.5%. A profit beat and a share buyback is a big reason why. It's also a big part of that index. JD.com is up about 8%, and you've got Baidu also up about 4.5%. So again, when you're looking for outperformance, whether you like it or not, that's where they are, Tim.
All right, well, speaking of reliability, you can pretty much reliably guarantee that among the top read stories on the Bloomberg terminal are going to be about FTX and the continued fallout. I can't look away from the story. I can't look away from crypto. We do look at Bitcoin right now, not moving significantly. It's kind of been between positive and between gains and losses throughout the day today, still up 0.5 percentage point. Among the latest headlines, though, SBF and two other top executives at FTX getting big loans from Alameda Research, the company's affiliated trading arm, this according to a bankruptcy filing this morning. And then advisors overseeing the bankruptcy of the company are struggling to locate the cash in crypto. And you guys heard this. The new CEO, John J. Ray III, who oversaw the liquidation of Enron, said that the lack of controls just unprecedented.
You know who has a great quick take piece on all of this?
I do.
Scarlett Fu.
We played that on our program
We just played
earlier.
it on our program.
Oh, amazing. I love that.
Yeah.
All right, well, hopefully we can get to that a little bit later. Just a quick check on the broader markets, guys. Down about 0.6% on the S&P 500. The NASDAQ indices down about a similar amount. The big underperformer of the day, you're going to find that with the Russell 2000, Scarlett, down by more than 1% here on the day.
You know, you look at the S&P 500, it's only down by 0.5%, but then you look at the industry movers, and what's striking here is that 10 of the 11 groups are in the red. The only group that's not falling today is technology, and it is barely holding on to a gain of 0.1%. And that's largely on the back of Cisco, to be honest. And some chip makers, Romaine, you pointed out the Philadelphia Semiconductor Index still holding on to a gain of about 0.75%. Within utilities, the worst performers, all 30 members in the S&P 500 are down, and decliners outnumber advancers by a ratio of 3 to 1 as well.
Yeah, some of the biggest movers today, at least in the S&P, that actually belongs to some of the retailers. Macy's shares having a wonderful day, up about 13% here on the day. And Bath and Body Works, I haven't been in one of these places in a while, but apparently other people are. Their
You
forecast,
like those bath
It's not
fizzies.
really
I don't. It's just, what is it? It's
And the
candles
stores smell
and
so
soap.
nice, right?
Everything's like vanilla and
Vanilla and patchouli or something like that. Who knows?
Those are just the California ones.
Did you say patchouli?
Patchouli is
Patchouli.
I don't know, jasmine, lavender. Anyway, up 24% here on the day. TJX, the rummage sale that Carol seems to like, down about 2% on the day. And keep an eye on Tesla shares. They were down about 3% here on the day on a lot of speculation right now surrounding Elon Musk. I do want to bring your attention to something that's not on the board. GM shares, which were in the red a little bit earlier, now spiking up about 2% here on the day. General Motors raising its 2022 guidance, about 3% here on the day on a lot of speculation right now surrounding Elon Musk. I do want to bring your attention to something that's not on the board. GM shares, which were in the red a little bit earlier, now spiking up about 2% here on the day. General Motors raising its 2022 guidance, 2022 here, for adjusted automotive free cash flow. The company talking big time about its EV push here and saying that this will be the big driver for the company. GM expecting EVs to be profitable in 2025 in North America. Just to walk you through a couple of the numbers here, just so you have them real quick. For their full year adjusted EBIT, they're looking at $13.5 billion to $14.5 billion. That's a little bit the lower end of that range higher than what they had given before. The higher end of that range lower than what they gave before, but overall above the consensus estimates out there on the street.
Well, when I heard this, I thought it was really curious that GM was giving some kind of pre-announcement in the middle of the trading day, but this is from the company's investor day.
Yeah, the company having an investor day.
Remember, we gave a heads up earlier in the week. Our David Welch had a story out that specifically they were going to talk about their electric vehicle program and expecting that to be profitable in 2025. So we did get a heads up and expected some headlines, but this is more bigger broadly about their market.
And let's stay on this for 1 second, because the other headline coming is that they plan to build 400 200,000 EVs in North America from 2022 through 2024. So basically over the next couple of years.
Right.
But I think the key issue right now with these headlines that are coming out is really the profitability aspect of it. That was the concern. We knew GM had the capacity to produce that level of vehicles. The question is, were they going to be doing it at a loss, as most people had assumed that they were?
Yeah, and we got to remind everyone that the big player in the room here continues to be Tesla, and in the way it's been under pressure over the last year, as other companies have come in and said, wait a second, this is a game that others can play as well. Century-old automakers that have experience building vehicles can also do this, and we're seeing huge shifts from the likes of Volkswagen, Ford, and of course GM as well.
That first mover advantage is disappearing very quickly for Tesla. It's been something that buoyed the stock for so long. It's interesting as well when it comes to General Motors and this forecast that it's going to be profitable with this EV, is that it's perfect in timing with what investors want at the moment, which is show me the money. Forget about growth. We want to see actual numbers. We want to see actual profits. This is an economy that does not, you don't get a lot of flexibility. You don't have a big cushion, so you better deliver.
Yeah, we're going to keep an eye on that stock. Really all over the map right now, but still up about 1% here. Interesting story there. I do want to turn back to the debt markets here, and particularly what we're seeing on the shorter end of the curve. The big sell-off happening today, 9 basis points higher on your 2-year yield, and more importantly, that 2-10s inversion are really starting to get interesting here. A lot of people saying that they really want to see us get down to about negative 100 basis points on that 2-10s. At one point on the day, we were actually below negative 70 here, so definitely moving in that space here. And this is now less about a repricing of Fed expectations and really about a repricing of economic condition expectations and recession expectations as well.
Well, and that has certainly been kicked around, bounced around, thanks to all of the Fed speakers that are out there. And one who has been one of the more hawkish voices out there, and out there front and center early on when it comes to inflationary concerns. We're talking about Jim Bullard. He's the president of the St. Louis Fed. And he said in terms of rate moves, we got to keep going. Check it out.
Even under these generous assumptions, the policy rate still isn't at a zone that might be considered sufficiently restrictive. To get to this sufficiently restrictive level of policy, we'll need to increase the policy rate further.
All right. That was Jim Bullard, the president of the St. Louis Fed, earlier at an event in Kentucky. What do you got?
So it's sufficiently restrictive. Is that the new transitory now? Is that what we're all going to
Don't you know they have their own terminology? Yeah. I mean, we got to kind of interpret what it all means.
But given the long and variable lag between policy moves like this and what ends up happening with inflation, I mean, how do we know when sufficiently restrictive is there? That's why I guess I'm not a Fed governor.
My head is spinning from all the jargon. Really, what did he just say? He just said maybe the Fed needs to stay with its current.
He said, we're not going to pivot.
Yeah.
We're not going to pivot.
Here's a hint, guys. Fed policy and figuring it out, not an exact science.
Yeah.
I'm just going to say. All right, we're going to continue this conversation. We'll be back in less than an hour's time. Radio, TV, YouTube, and Bloomberg Quick Take. We do it all. We're going to count you down to the close beyond the bell at 4 p.m. Wall Street time.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week. We'll go back to our TV colleagues to count down to the close. Are you like...
I had some other Fed speak ready to go.
It
wasn't just Bullard today.
Got to move fast.
Okay, Neil
But Bullard's an important one.
Yeah, he is.
Go ahead. Go ahead.
Well, Neil Kashkari, he really squashed, he was on the Odd Lots
former
podcast.
Dove turned hawk.
Exactly. Yes, that is the important context, because a few months ago he was on the Odd Lots podcast and he basically said, hey, this rally is really not what we want to see, and this was the rally that we saw over the summer. And then, Fed officials came out and squashed that rally. Our Drive to the Close guest who we had on yesterday said that the bear market rally, that she says what we're seeing right now over the last week is a bear market rally.
Right.
And we're going to have a repeat of what we saw over the summer.
She could be right. She could be wrong.
You're right.
It's kind of tricky.
It was Emily Hill.
But in the meantime, and I love when Mike comes on and he tells us, because we're getting so much in terms of the way of Fed speakers. I mean, we have stories, right, that are constantly just updating about what the Fed speakers are saying. But Jim Bullard is somebody who earlier this year, out there in front and center, talking about inflationary concerns, talking about maybe the need to start moving, more quickly when it comes to Fed moves. And so what he says, I feel like I'm not saying they're not all important, but some of the Fed speakers maybe you got to lean in a little bit more closely.
Well, you're right. You got to add it up. I mean, what we saw from Mary Daly yesterday, a pause in Fed rate hikes was off the table.
Right. So there's another one.
Add it all up.
In the meantime, going back to GM real quickly, sees total capital spending of $11 to $13 billion per year through 2025. You know, we talk about capital expenditures. It's important, tells what a company feels upbeat or not. That's real material that we can use to assess where we are in the markets.
Let's get to world and national news. Denise Pellegrini is in world headquarters here at Bloomberg. Hey, Denise.
Yeah, thank you. We're getting word from lawyers of jailed WNBA star Brittany Griner. She has begun serving a sentence in a Russian penal colony, and now we're getting word that she is trying to stay strong. So just a little bit of food for thought there as we look at our world national news. House Speaker Nancy Pelosi not seeking a leadership position in the next term of Congress. Pelosi also saying this month's midterms proved Americans oppose the violent insurrection on the Capitol on January 6th.
With these elections, the people stood in the breach and repelled the assault on democracy. They resoundingly rejected violence and insurrection, and in doing so, gave proof through the night that our flag was still there.
And Pelosi says she will continue to serve in Congress for her San Francisco district. When Republicans control the House next year, they could put the brakes on some House investigations into former President Trump. And also, as Bloomberg's Nathan Hager reports, Trump's latest run for the White House. Well, that could put more political pressure, when you think about it, on federal prosecutors who have been investigating Trump's for months.
The Justice Department has said it's determined to carry on the probes against the former president, but it will now have to take extra steps to shield those investigations from claims of political impropriety. Prosecutors may also want to wrap up their work quickly to make sure any appeals get done before voters head to the polls in 2024. One former federal prosecutor tells Bloomberg News Trump's candidacy will allow him to portray himself as a victim and rally support from his base if he's charged with a crime in the coming months. In Washington, I'm Nathan Hager, Bloomberg Radio.
All right, thank you, Nathan. And Global News, 24 hours a day, on air and on Bloomberg Quick Take. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. Denise Pellegrini with World and National News. Carol Masser along with Tim Stanovic on this Friday's Eve, live in our Bloomberg Interactive Broker Studio, streaming on YouTube and on Quick Take. You can see us everywhere. Sorry if we're everywhere and it's freaking you out. But anyway.
Also, is it freaking you out?
No,
Okay,
I'm good with it.
Good.
Also everywhere, though, freaking a lot of people out still is everything that continues to unfold when it comes to FTX.
Yesterday afternoon, there was sort of this collective gasp that you could hear across crypto Twitter. It's when Vox's Kelsey Piper published an article that included an hour's worth of direct messages between the two folks that ultimately Sam Bankman-Fried thought were private, but Kelsey's a journalist. Kelsey ended up publishing them on Vox under the headline, Sam Bankman-Fried tries to explain himself. He talks about what went wrong, what lies he told along the way, and in the words of Kelsey Butler, why he did what he did.
Yeah, it was past
Kelsey Piper, excuse me.
It was past midnight Bahamas time, where Bankman-Fried is reportedly still located, and we went back and forth on Twitter, Kelsey writes, for more than an hour. He said, still working to try to raise the funding needed to pay back all his depositors. So basically it was like, hey, how are you, what's going on? And then went back and forth, right?
The screenshots in here, a lot of words that we can't actually use.
Yeah.
But he says, F regulators, they make everything worse. They don't protect customers at all. He said that in response to, quote, you said a lot of stuff about how you wanted to make regulations just good ones. Was that pretty much just PR too? He says, yeah, just PR. And, there's no one out there making sure that good things happen and bad things don't.
A question, does seem like some kind of consumer protection would be good, like maybe regulators can't deliver, but sure does look like consumers lose their shirts a bunch. This was coming from Kelsey. SBF agreed on both. It would be good, but regulators can't do it.
He did come out after this article was published and say that these direct messages were not meant to see the light of day. But after all, Kelsey's a journalist.
Oh my gosh, this is why this one is just one for the books. You are listening and watching Bloomberg.
Hits, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 43 minutes to go ahead of the closing bell. With the Dow, the S&P, and NASDAQ all retreating right now, let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading in the red right now. A Dow currently down 142 points. S&P's dropped 33, and NASDAQ is off by 105. The U.S. 10-year yield at 3.77%. Gold is down 14. Oil is under pressure, but Bitcoin is trading higher by 0.5%. Among the main 11 S&P sectors, all were trading in the red, led by declines in tech and healthcare, and leaders to the upside in the Dow. Cisco after earnings, as well as Merck, and Salesforce, Disney, and Home Depot led to the downside. Also after earnings, Macy's gained 13%, Kohl's rose 4%, and in other news, GM raised 2022 guidance for adjusted automotive free cash flow, and Dow Jones reported in the crypto space, Genesis sought an emergency loan of $1 billion by Monday. Wrapping things up, Applied Materials reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, Bill, and here live breaking news over your Bloomberg. Type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Well, among our most read on the Bloomberg, as you know, a lot to do with FTX and with crypto. One particular story is about crypto stocks, which we know, Tim, are way, way, way off their highs.
They are, but, you know, one person's loss is another person's gain.
True.
So Bailey Lipschultz is with us this afternoon. He's equities reporter for Bloomberg News. He's got a great piece out about how crypto stocks rout delivers a $469 million win to short sellers. We're talking about companies like MicroStrategy, Coinbase, and others that are publicly traded have done the shorts well, Bailey. I mean, the right place at the right time, right?
Yeah, and we've seen short sellers really ramp up those bets as kind of FTX initially started to fall out. So the beginning of last week when maybe they were going to get bought by Binance, but kind of shark smelling blood in the water and really kind of leaping onto it. And we've seen that be a very profitable short bet for investors, really, if you look at it, obviously, in the last week, but even throughout this entire year.
Are we seeing short positions increase even on these names? I'm just curious, what are we seeing in terms of the trend lines? And I feel like they were fairly well shorted, maybe even ahead of it.
Yeah, we've seen short interest really just kind of, as you said, be very high. We're in a market where investors are more than happy to short pretty much anything in the growth space, especially those exposed to Bitcoin. But the last 7 days, almost $93 million of new short selling in these stocks. And that's kind of reversing something that we had seen more of covering in the last month as people maybe were betting that the bottom was already in.
Are people sending you IBs right now? Those instant Bloombergs?
I think they might be.
They might be. They're listening and they're saying, Bailey, we agree with you.
Bing, bing.
That's what that noise is.
We do it in real time. We're live, guys.
Bailey, here's what I don't quite get. And maybe you can explain it to me because you look at this stuff so closely. Let's say you are a regulated crypto exchange, such as Coinbase, and one of your biggest competitors just got taken out. And now people need a new place to go to buy and sell crypto because they want to use something that is regulated and publicly traded and has audited financial statements. Wouldn't FTX's loss be Coinbase's gain?
Yeah, and I think that's kind of where the short thesis plays out, though. So, yes, people would, in theory, be rotating over to a platform like Coinbase because, obviously, as you mentioned, it should be better regulated and should have more stability. But when you're looking at this, the entire crypto space is kind of a long game. So if you're shorting Coinbase or you're investing in Coinbase, right now you have to be thinking, is this going to be viable not only in the next few months, but is this something that we're going to actually see tremendous growth in the next 5, 10, 15 years? And that's really where the questions are kind of bubbling.
The backdrop to this is that, okay, if something like this happened to FTX, which was seen as the face of the crypto industry, then, you know, some people could be throwing in the towel and saying, I'm just done.
Exactly.
There's no future here.
Exactly, and we've been learning every day and every hour, it seems, how kind of overlapping this is and how actually it is a very tight ecosystem, even though it has long been pitched.
Decentralized, right? Quote unquote.
Exactly.
Yeah.
What's interesting, like what you said, you know, for every seller, there's a buyer. And we know Kathy Wood, who is certainly in on all things disruptive and innovative. And she does change her tune a little bit on some things sometimes, but she really sticks to her guns when it comes to what she's betting on. She's been, buying Coinbase, Silvergate Capital, Grayscale, Bitcoin Trust. She is looking at these dips as some opportunities.
And that's been the whole argument of ARK, is that they're investing with a 5-year horizon. And one of the things we've been tracking has actually been retail traders also buying. So as you're mentioning,
they are buying.
They are buying, not mass, not the buying that we had seen, you know, back when the initial bubble was really kind of running up in late 2020, early 2021. But they are seeing retail data, at least that we've been tracking. Retail traders are buying this dip kind of with that diamond hands hope that eventually things will go back up.
You know, Bailey, one of the conversations that Tim and I keep kind of having with this FTX fallout over the last couple of weeks is, you know, we've all been trying to track what kind of further market contagion, and it really does feel like there's contagion within the crypto space, but even that is a little bit limited, but that's where you're really seeing the pain. But I mean, ultimately, as you follow this sector against the backdrop of the broader markets, like what are you going to be watching over the next, I don't know whether it's month, 2 months, 3 months, to kind of figure out where this settles in and what it means in terms of the overall investment space and as an asset class?
I think it's just tracking the contagion. Obviously, you saw, again, the fallout of FTX was so swift that they were in a great financial position. Then they were going to get bought by Binance, and then there all of a sudden was an $8 billion liability black hole on their balance sheet. So when you're looking at it, the entire argument of Bitcoin and cryptocurrencies in this entire space is that it's the future of finance, and you should really just trust us, even if you don't. You shouldn't. Your distrust of traditional banks plays into this. Well, that's one of the things that's been falling out, and that's been kind of the argument of this crypto winter. Is it a crypto ice age, and is it a crypto extinction?
Well, that's what I'm wondering. And, you know, I've been texting.
You keep asking,
I do.
Like
I keep asking if it's over. And I think
Yeah.
Katie Greifeld last week asked the question in a Twitter poll. And I think it was 50-50. I could be speaking out of turn, though, because she does a lot of polls. What are the analysts telling you, who you speak to? Like, how has their tune changed around crypto and crypto-related stocks?
One of the things that's been the most interesting to me is that a lot of crypto bulls have kind of bought into the idea that maybe you should only be allocating 5% of your portfolio to Bitcoin, as opposed to kind of, you know, the laser-eyed people who are like, invest only in Bitcoin.
That's so weird. We didn't hear this a year ago when Bitcoin was at close to $69,000.
Much like covering SPACs, everything kind of...
Except, is Tom Brady running to the bankruptcy court?
He's actually named in the lawsuits, and he, in case you didn't notice, his Twitter profile no longer has laser eyes, and he's now a statue. So we're seeing a lot of the people who are more than happy to make a lot of money pitching these exchanges and these tokens changing their tunes, at least quietly.
The bots have been pretty quiet on Twitter for me, too, when I tweet about crypto lately.
Yeah, same here.
It's kind of welcome.
5%. Yeah, not all in. Like, don't, you know, put the
Not
retirement
all in.
funds, it seems. Bailey Lipschultz, thank you so much. So glad we could get to this story. Equities reporter at Bloomberg News. It is among the most read about the crypto stocks route and how it's helped out short sales.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week. Coming up, we've got another great story from the magazine.
Yeah, we're going to be speaking to Alex Barinka, technology reporter for Bloomberg News, about the problems that Meta Platforms, the company formerly known as Facebook, continues to face, and, you know, maybe Apple's role in it.
All right, first up, let's get to Charlie Pellet. Hey, Charlie.
Well, hello there. We've got just about 28 minutes to go ahead of the close. We're in the red. The Dow, the S&P, and NASDAQ all slumping. Hopes of a Fed pivot are vanishing. Right now, the S&P is down 0.8%. We've got the Dow lower by 121 points, down 0.4. NASDAQ is down 99. That is a drop right now of about 0.9%. As for the Federal Reserve and the interest rate outlook, Kate Moore is head of thematic strategy at BlackRock Financial Management.
We're looking for another 100 basis points of rate hikes at this point, but I think the risk is skewed to the upside here. Basically, you know, on both stronger economic activity and, frankly, strong consumer activity, leading to persistently high inflation.
The 10-year yield right now, 3.76%, with the 2-year, 4.44%. Spot gold at $17.60 the ounce, down 0.8%. West Texas Intermediate crude down 4.5%, 81.77 a barrel. Lots of earnings after the bell. Among some of the names will be Applied Materials, Palo Alto Networks, Gap, and Williams-Sonoma. Briefly, Dow Jones is reporting that Taylor Swift is canceling her Eras Tour ticket sale to the general public, citing sources. The general public ticket sale was scheduled to take place online and tomorrow beginning at 10 a.m. on Ticketmaster's website. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I was going to maybe be buying tickets.
No, you're not now.
I know.
I know you guys absolutely love Taylor Swift, don't you?
What's not to love? We're all Swifties.
Let me tell you, I'm
all
a big
Swifties at heart.
So am I.
Yep. All right.
Aren't we all? There we go.
How did you do that so quickly, Charlie?
It's the magic of radio. What can I tell you? Connection right to the mind.
Charlie, got to shake you off right now. All right, let's get to Alex Barinka, technology reporter at Bloomberg News, because she's got a great story, the new double issue of Bloomberg Business Week, dealing with Meta Platforms. Alex is with us via Zoom in LA. So, Alex, good to have you here. Tell us about your story.
Yeah, so we've heard a lot of kind of anger at the general economic conditions from all of the internet companies like Meta that depend on digital ads, blaming the economy for the really bad quarters they've had over the last 6 months or so. This week in Business Week, I'm writing that there might be kind of a bigger reason that Meta in particular's ad business, it has a big hole in it, and that hole is shaped like Apple. About a year ago, Apple changed its privacy policies for the iPhone that made ads on social media both harder to target specific people and harder to track the return on the spend on those ads. And a year in, Meta has estimated that that's had a $10 billion hit on its ad business. And myself and a lot of the analysts and insiders I spoke to for this story would also argue that that's what's dragging Meta down to potentially its third quite straight quarter of revenue declines. It's more Apple than the economy, and I tried to break that down for folks this week.
Well, there's a stark chart included in your piece that shows how other companies are faring or projected to fare between 2021 and 2022. TikTok, according to eMarketer, has a projected change of 155% versus Meta down at the bottom of a projected change of -2%. Why is TikTok able to capitalize on something when, they're using the same hardware and the same operating systems to deliver those ads?
I think there's two key reasons. So Meta, as you mentioned, Facebook, Instagram, those are Meta's companies, have historically been based on who you know. Your friend graph is how they derive kind of insights on you. And plus the information that they were able to glean from Apple to make sure that advertisers are reaching the people they want to reach. TikTok, on the other hand, has built out an AI kind of focused recommendation engine that is derived on a user's interests. So they know more about you than just who you know. They know who you're actually interested in. That is some of the information. It's not quite apples to apples that Meta has lost. So TikTok has been able to kind of really lean into this interest-based recommendations. That idea, interest-based recommendations, is also where Meta is spending a lot of money to kind of chase into that. Now, the one caveat I would give is Meta is still an advertising giant. They're still expected to bring in about $116 billion in revenue this year. TikTok is only about a tenth of that. So there is some kind of youth in growth there for TikTok. But that is kind of the big reason that folks might be looking to platforms where they can target people a little bit more effectively than maybe what's been lost on Facebook and Instagram.
I got to say, Alex, one of the lines I love in your story, you say the company has no experience managing decline. There's something to be said. I mean, this is a company that has been on fire, maybe a little bit of a, trouble at that IPO initially, but figured it out, righted the ship. But when things start to go wrong, like, you might not have a playbook or the people in place to be like, well, wait, how do we fix this?
Right, and you'll remember just last week they laid off 13% of their workforce in their biggest layoff ever. So this is a company now that's going to be expected to do more with less. So this Apple thing is a big problem, but there are a lot of other problems at Meta. You have the economic conditions. You have the scrutiny on the political power that Facebook and Instagram have on the world. You have this big bet that Mark Zuckerberg is making, trying to build a virtual reality world called the metaverse and funneling $10 billion a year into that direction. So there's a lot going on there, and now it's going on with 11,000 people fewer than just 2 weeks ago. So it seems like they're really going to have to kind of buckle down. We've heard internally that, there's still some restructuring going on, that, this is the first time that a lot of employees are being pushed to a level of efficiency and leanness than they ever have before. So this will definitely be one to watch as they kind of juggle both coming back from these changes that Apple forced upon their business, battling economic conditions, and trying to paint the future of computing in the metaverse.
Hey, Alex, I kind of want to throw a little bit of a curveball at you because it's, not necessarily what your most recent piece is about, but I know you've done so much reporting about this. I'm wondering what small businesses think of this change, because they're the ones who have done a lot of advertising historically on Meta platforms, including Facebook and Instagram. And now, ostensibly, it's more difficult for them to target their potential customers.
Yep, throw those curveballs away. I will say big businesses have been okay. They've spent more on like newspapers or buying ads on TV channels. So the big companies can do that because they have the budgets. Small businesses have kind of historically been stuck with two options with basically Meta or Google, Alphabet's search ads when it comes to reaching customers on the internet. So they've been the folks who basically have had to kind of roll with the punches here. And that's also why we think there's been such a big decline in overall ad spending. Those are the folks that kind of have to pull back because they can't write, say, a $500,000 check to advertise on something like Hulu. They're kind of stuck reaching customers on the internet, and it's gotten a lot more expensive because the targeting is less effective. So those folks are the ones that are probably impacting it the biggest. From a pure quantity perspective, that's the majority of Meta's advertisers. So small businesses also, are probably looking to places like TikTok and other properties where they can spend the small budgets they have to find the customers that they want.
Alex Parinka, really appreciate it. Tech reporter here at Bloomberg News.
Let's get to Denise Pellegrini standing by with World and National News. Hey, Denise.
Hey there. Well, President Biden's top economic advisor, Brian Deese, who's been on Bloomberg Radio multiple times, he is expected to leave the White House next year, according to sources, though the sources do also say the president would like Deese to stay, and there's no timeline for his departure. Also, Cecilia Rouse, chair of the Council of Economic Advisors, she's also said to be leaving next year. She'll return to Princeton. Moving on here, Nancy Pelosi announcing she is stepping down. More comings and goings as Speaker of the House.
Thank you all. May God bless you and your families, and may God continue to bless our veterans and the United States of America. Thank you.
And it really was a long goodbye there on Capitol Hill. Applause was very, very long. Then she went on to thank just about everyone in the room personally. She will continue to serve as congressperson for her district in San Francisco. And now that Republicans have captured a majority in the House GOP expected to put more pressure on the White House to take a more hawkish stance with China. Bloomberg's Amy Morris has more on that.
Republican lawmakers are likely to portray President Biden's attempt to ease tensions with China as a sign of weakness. They say they'll probe White House policy toward Asia and confront Beijing more forcefully. House Republican leader Kevin McCarthy wants to form a special congressional committee to go after China on everything from trade and national security to the origins of COVID-19. He also plans to lead a congressional trip to Taiwan, something House Speaker Nancy Pelosi did earlier this year. In Washington, I'm Amy Morris, Bloomberg Radio.
All right, thank you, Amy. And Global News, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. Denise Pellegrini in the Bloomberg newsroom here at Bloomberg.
What do you want to talk about, Carol?
Can we talk about mortgage rates?
Yeah.
Kind of been following these numbers.
Yeah, I have too. I think a lot of people have. It says a lot about where, kind of explains why the housing market has slowed down a lot.
Yeah.
But a lot of the headlines that we've been focused on over the last few months have been about mortgage rates make the biggest jump higher, right?
Right.
Since, the 1980s. Today, we actually saw one that went the other way, which I think is finally a little bit of good news.
U.S. mortgage rates posting the biggest drop since 1981, falling to 6.61%. We're talking about the average rate for a 30-year fixed mortgage, 6.61%, the lowest level in almost 2 months. Freddie Mac putting this out in a statement today. Last week, the average was 7.08%. That's a pretty big drawdown.
Yeah, that is. I mean, look, it's the biggest drop since 1981. It's meaningful.
Yep.
But if you were to go back about a year in time and say, wait a second, this is still twice what a 30-year fixed ended up costing, in the latter half of 2021, then you'd be right. And a lot of people locked in those lower rates. They locked in at, sub 4%. A lot of people locking in at sub 3%.
Those are those annoying friends and family
that
who
are
like,
never
guess
going to
what?
move.
No, and who guess what? I locked it in. I was like ahead of the curve.
Well, you know what Gina Martin Adams says about them? She says they're going to be stuck there and not going to be able to move, and their home values will actually end up falling as a result of higher mortgage rates. She told us that a few weeks ago.
She did say that. Perspective, right? In
Yeah.
terms of it's because you will anticipate that the housing market, as it continues to or will soften, that those prices that have been kind of on fire will go down as
We
well.
haven't seen them come down as much as
No.
many people. It takes a while for it to work through the system.
Correct, exactly. So kind of interesting. Mortgage rates, though, have doubled this year, have depressed demand for homes, causing builders to pull back on construction and pushing sellers to cut back on their asking prices. While the latest decline in rates offers a reprieve, the recent volatility in borrowing costs is, quote, causing a large degree of uncertainty for both house hunters and owners considering listing their properties. That's from George Rattau, manager of economic research at Realtor.com.
It's kind of hard to lock this stuff in sometimes, too.
It's complicated, as everything is, it feels like, in our world. This is Bloomberg Radio.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Hopes of a Fed pivot are vanishing. The Dow, the S&P, and NASDAQ all lower. 13 minutes to go ahead of the closing bell. Dow Jones Industrial Average now down by 69 points. That is a drop of 0.2%. The S&P is lower by 22, down 0.6. We have got NASDAQ down 67 points right now, a drop there of 0.6%. 10-year yield 3.77% with a 2-year yielding 4.45%. Spot gold now down $13 the ounce. Gold lower by 0.7%, $17.60 the ounce. Bitcoin right now is trading higher by 0.9%, 16,673 on Bitcoin. West Texas Intermediate crude tumbling 4.2%. WTI right now at 81.95 a barrel. Should mention Brent crude as well, 89.93, back below $90 a barrel. Brent today down by 3.2%. Briefly, lots of earnings after the bell. Coming up, we will be hearing from Applied Materials, Palo Alto Networks, among tech names. Among retailers, we'll also be hearing from Gap and Williams-Sonoma. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. Having a moat might seem like an advantage when it comes to controlling who gets into your country, but that's not the case for the UK, where a surge in migrants arriving by boat is overwhelming the country's asylum system. In response, the government of Prime Minister Rishi Sunak has revived plans to deport some asylum seekers to Rwanda, where they'd be allowed to settle if their claims are approved. But Britain's partnership with Rwanda, which has a less than spotless human rights record, carries significant risks. It would be better to focus on fixing the existing immigration system, for example, by investing in staff and technology to speed up asylum claims. The UK has shown itself capable of leadership on some migration issues in recent years. Pushing ahead with this ill-considered scheme would tarnish its hard-earned reputation. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, we have just about 10 minutes left in today's trading session. Bouncing around here on the equity trade. Same story when it comes to the yield trade. I think as investors go from Fed conversation to Fed conversation. Right now, in terms of stocks specifically, as Charlie mentioned, definitely off our lows of the session. And we're seeing a leg up, Tim, here in our final minutes of trading.
We are, but volume is really low right now. The S&P volume down 20%.
I think people are already starting to think about the Thanksgiving holiday. Maybe.
That's what I want to ask Charlie Massimo all about. He's Senior Vice President and Financial Advisor at the Wealth Enhancement Group on the phone from Blue Point, New York. Charlie, good to have you back with us. How are you?
I'm great, thanks. Thanks for having me, as always.
Yeah. Hey, so what are investors waiting for? Why are they on the sidelines?
I think the Fed's confusing the heck out of everybody with comments, and there's a lack of conviction. Yeah. I think there's just a lack of conviction on which way we want to go, and I think people are just waiting for the next data point to make a decision on where they want to put their money.
Well, where would you want to put your money right now if you had to put some new money to work?
I think there is so many positive things happening in the market right now, despite what we read in the headlines. And you have inflation, which is coming down without seeing any deterioration in the labor market, which is a really positive indication and something the Fed is certainly going to pay attention to. I think you have S&P 500 companies they're so flush with cash, which means that we probably will see increase in dividends coming along. So I'm a huge proponent of value stocks that are going to show increased dividends and really going to pay people to wait while we see a real turnaround in the market.
Can you name any specific value stocks that you have your eye on right now?
Yeah, again, I think when you see any stocks like Target that are beat up, these are great companies, right? And when you can buy a company 20 to 30% cheaper than where they were just a year ago, you have to take advantage of it. Because again, I think in a year, 2 years from today, these companies are going to be significantly higher. And again, I've always said this. This is not when you become shy of investing in the market. This is when you become very aggressive and buy some of these great American companies.
So it raises the question about whether or not you think we have further losses ahead of us. Like, is there going to be a better time to get into the market, maybe in the first half of 2023?
Well, listen, you can always debate when is the right time, and I think as an individual investor, you have to see where you are in your own time frame. But again, when these companies, we spoke probably about 2 months ago when the market was about 10% lower than where it is today. So again, was that a good time to invest? Did we hit bottom? I think when you look at the market, it's much more positive and much more constructive now, meaning the lows are much better than what we've seen a year ago and a week ago or 2 weeks ago, and the highs are pretty significant on up days. So I think we're starting to see a market that is trying to find direction, but the direction is much more positive than negative right now.
Yeah, it is kind of, it's so funny. I was just looking at the home builders, the home building index, which is certainly a laggard in today's market. It's down about 2% if you look at the S&P Super Composite Home Building Index. But, it's been bouncing around a lot. And I understand the housing data feels like it's a little bit more to the downside. But the group is still up 15% since October 20th. I always feel like there's mixed signals in this market. So, Charlie, what do you most monitor for getting an idea of maybe where valuations should be and where the market will ultimately go? Because it does sound like you have some optimism for the trade in 2023.
Yeah, not only 2023 and certainly beyond. I mean, when you think about some of the staggering numbers, I was just reading today that the Brookings Institution projects that between 2020 and 2030, about 1.6 billion people will enter the middle class. I mean, that's significant. So you think as they enter the middle class and these great companies that will continue to prosper from this growth in our economy and in our world. So it's really not one specific place that I'm looking. I'm just looking as a market as a whole, that as we continue to see these numbers improve, there's just an amazing opportunity for the companies across the board really to see increased values at a significant clip.
Okay, so Charlie, I want to go back to Fed speakers because we talk about them a lot here, of course, and we try to dissect all of their comments. And I'm wondering if you take everyone who you've heard from over the last few days or so, the message that you're seeing, is it one that's broadly showing that we're going to see an easing of rate hikes come December and the early part of 2023, or is it one that says there's still more work to do?
Well, I think over the short term, there's probably still more work to do, and that's not because of inflation not slowing or slowing down, because we are, but I think it's really the Fed that's trying to be overly aggressive in this market. What he's done already, and I agree with what he's been doing, because, again, a short-term bear market is much worse than long-term inflation for this economy. So I agree with what he's doing, but I think now it's time to let all these raises seep into the market and slow down. So what I'd love to see him say is that we may have more work to go, but we're going to slow down the pace, and we're going to wait to see that our increases in yields are really helping the inflation slow down. That's what I'm hoping he says. I don't know if he'll say that, but I think that would be a huge positive indication for the market.
Charlie, we've talked about this before with you, because you and what you do at your firm, you specialize in planning for families impacted by autism. And, these are families that really have to make sure that they've got investments in place. So I do think in an environment where we feel like things keep coming at us left and right, longer term, what do you see as the best bets?
Yeah, again, it's a really great point, and I think that you have to take a deep breath as an investor and really measure where you are from a risk tolerance standpoint. In the past few years, it was great to own technology, but now you have some of those companies down 30 to 70%.
Yeah.
So you've lost 3 to 5 years of growth in 1 year, or in less than 1 year.
Does that ever come back?
It will, but it's going to lag the rest of the market.
Like, is it going to look like the dot-com bust of the late 90s, early 2000s and take a decade?
I mean, I don't think it's bad, because some of these companies have real earnings versus .com, where they had no earnings at all. So I think we have companies like Amazon, that are having a difficult time that will still show some significant earnings moving forward. But I do think, again, getting back to the point of Carol, you have to look at the market and say, hey, where am I going to get the steadiest growth? Not get the big ups and downs. And I think the steady growth is being broad-based, not overweighting in any industry and sector. And again, I know value is out of favor, but again, over time, value will be the more consistent play.
All right. Well, Charlie, thank you so much. Have a good Thanksgiving. Charlie Massimo, Senior VP, Financial Advisor at Wealth Enhancement Group, on the phone from Blue Point, New York. All right, time to head over to our TV colleagues for our cross-platform coverage. We're going to count you down to the closing bell on this Thursday. We're going to do it on radio, TV, YouTube, and on Bloomberg Quick Take.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu, we're counting you down to the closing bell. And here to help take us beyond the bell, it's our global simulcast with Carol Master, who's leaning to the side, and Tim Stenovic, who's still straight up. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube and Quick Take to parse the most crucial moments of the day. Carol, what was most crucial to you?
Well, I don't know. I feel like there's no direction. I mean, I feel like we're bouncing all around the place. And what's interesting is I was looking at the home builders in particular today. They're down almost 2% in today's session, although they've bounced off in a big way since mid-October. We got some housing starts data that was lower, so some concerns about that. But I just feel like, you dig deeper, Romaine, and you constantly see contradictions of the supply is still tight, so the fundamentals are out there for this market to still do well, but then if you get a recession, it won't do so well. So I just feel like there's a lot of contradictory signals.
That's kind of exactly what Charlie Massimo, the Senior Vice President and Financial Advisor at Wealth Enhancement Group, just told us on our program. He said he thinks the Fed is confusing the heck out of everyone. That's his quote. Okay. He says, I think there's a lack of conviction on where we want to go. And I asked him why, volume is so low. I mean, we're down 20% right now on the S&P 500. Yeah. And he said everybody's just waiting for kind of that next economic data point because we are getting mixed messages.
Well, I think it's interesting. I mean, you talked about how all these mixed signals. We heard from Neil Kashkari a little bit earlier, Scarlett, who talked about this. I think his exact quote was that the U.S. economy is sending wildly mixed signals. And when you look at housing starts, when you look at the Philadelphia Fed outlook that we got, as well as initial jobless claims, that was definitely mixed when you add them all together.
In other words, time. We all need time to see how the data shakes out because you can't draw any conclusions from 1 month of encouraging CPI data. Because look at what happened back in July. There was a head fake when it came to inflation.
Absolutely here. And now you have markets trying to sort it all out as we get the closing bells here on this Thursday afternoon. A Dow Jones Industrial Average that has spent a good portion of the day in the red. We're waiting for these numbers to settle, but basically it's going to be unchanged on the day. Right now, the numbers say it's down about 6 points, so that's basically less than 0.1%. But again, we're going to wait for these numbers to settle. The S&P 500 definitely going to finish lower, but by only 0.3%. Similar story for the NASDAQ Composite, down about 0.3%. And the Russell 2000, which was down more than 1% on the day, trying to claw back, but still going to finish lower, Carol, by about 0.8%.
Yeah, the S&P 500 digging deeper. Most names in the index were lower today, 333 to be exact, 168 higher, 2 unchanged. But what I will point out, Scarlett, is we actually did see some buying into the close, which I thought was pretty interesting. Here we are on this Thursday when we saw so much bouncing around that there actually were some buyers coming in.
Yeah, absolutely. I look at the 24 industry groups in the S&P 500. At one point, there were only 3 groups that were higher, but now you have 7 groups that are higher. So all along, we've seen the tech hardware space doing well because of Cisco coming out with a better forecast than expected for this quarter. And telecoms getting a lift thanks to T-Mobile. But utilities have been in the red all day. They continue to finish in the red, down 1.8%.
All right, let's get to some of those gainers. Scarlett mentioned it. We've been talking about it. Cisco, top in the NASDAQ 100 and the S&P 500. Earnings last night, biggest maker of machines, that run computer networks and the internet. So they are, feeling pretty upbeat in terms of their results. They gave a bullish revenue forecast helped by corporate and government spending on tech, said demand did not fall off a cliff. So this stock was up almost 5% in today's session. Bath & Body Works, top in the S&P 500, up almost 25% in today's session, boosting its full-year profit forecast due to a focus on innovation and cost control. Analysts found the results to be impressive overall, and investors certainly piled into this one in a big way. And do want to mention, I know I talked about those Chinese ADRs earlier. Well, Alibaba, one of the standouts on top of the NASDAQ 100, up about 8%, soaring amid profit beats, and also talked about stock buyback. So we're talking about $15 billion, maybe announcing plans to upsize it to buy about $15 billion. So investors, you guys, rushing into this one.
All right, you got the gainers, Carol. I got the decliners. If we look at the bottom of the S&P 500 in terms of weights on it today, Tesla and Amazon were the biggest. Let's start with Tesla. Shares finished the day down by 2%. Shares moved lower after we saw Democratic senators led by Richard Blumenthal and Elizabeth Warren call on the FTC to conduct an oversight and enforcement of Twitter's consent decree. Of course, Tesla CEO Elon Musk's Twitter deal has been a drag on the company's stock. And then keep an eye on shares of Amazon as well, down 2.3%. This was one of my decliners yesterday, down another 2% today after the company began its largest round of layoffs in its history this week, down 20% just since October and nearly 50% since its highs of last July. And then NVIDIA shares starting out higher today, but finishing down by 1.5%. The company did report third quarter revenue that was better than expected, though the company's outlook did miss some estimates. Analysts still broadly positive on the company, but a declining day for NVIDIA.
Let's take a quick look at the yield space because, of course, a lot of those comments that we got out of Bullard as well as some of the other Fed members really drove that sell-off in treasuries today. At one point on the day, we were down more than 10 basis points pretty much across the board. Most of the activity, though, was in the shorter end of that curve. A two-year yield right around 4.4457. That's up about 9 basis points here on the day. The 10-year still firmly under 4%, but that also did move higher, and we did see a deeper inversion on that 2-10s curve, down below -70 at one point here on the day. I do want to go back to some earnings here, and Carol, you left out one sort of key mover today, and that was, of course, Macy's. Interesting moves in some of the retailers. Now we're getting earnings out of Ross stores here. They look pretty good. Comp sales were actually down, but 3%. That sounds bad, but the street was looking for a decline of 8% here. So basically not as bad as expected. 3Q operating margins were better than expected at 9.8% versus a street estimate of 8.8% here. And here's your guidance here for the fourth quarter. They're looking for EPS of $1.13 to $1.26. The street on average was looking for $1.16, and the company now saying that 4Q comp sales will be flat to down 2%.
All right, so let's get to also another one report. The street was looking for $1.68. Fourth quarter net sales, $6.75 billion. Also outperformance there. The estimate on the street was $6.38 billion. And as for the outlook, first quarter net sales about $6.3 to $7.1 billion. Way outperformance because the street estimate right now is $6.34 billion. Stock is up about 2%. But you know, you guys, the stocks, the semiconductor area, we've had a lot of bad news and we've seen a lot of pressure on this sector. And that explains why there's some upbeat reaction here in the after hours when it comes to investors, pushing AMAT up about 2.4% because these are some better than expected numbers.
Yeah, and building on the gains that we saw in trading today, SMH, the ETF that tracks semiconductor stocks, closing up 0.8%. For now, it looks like we might see those gains continue. Romaine, I just want to go back to Ross Stores for a moment because I guess it's not that surprising to see it do well. I mean, Ross is perfectly positioned for this kind of economy where the consumers might be trading down or looking for a deal.
Yeah, well, that's why I brought up Macy's, because, I mean, when we looked at their earnings and how well they did today, those shares up something like 14%, it was the idea that folks were sort of buying into their higher-end brands, so the Bloomingdale's and the Blue Mercury, not necessarily at Macy's itself. When we were speaking with John Edwards, a Bloomberg editor here, who basically talked about that's really the dichotomy now that we're going to see when it comes to consumer spending. The really high-end folks are going to do well, and some of the folks at the lower end of the spectrum are going to do well, and maybe Ross Stores, I guess you would fit into that lower end.
If you're going to spend money, you want to spend it on a big brand, a brand that's worthy of your dollars, and if not, you want to get a great deal.
If you're shopping for me, definitely Bloomingdale's over Ross.
What about chips? Is there an okay segue to go back to AMAT? Because I want to talk about some of the comments about the economy that we're seeing in the press release here.
This is important.
Yeah, Gary Dickerson, the president and CEO of the company, this is what sticks out to me. He says, quote, though we are seeing a slowing the rate of spending growth in the near term amid geopolitical and macroeconomic challenges, we are making the strategic investments to win the major technology inflections that will enable Applied to outgrow the semiconductor market. So he's going to say that they can overperform the market by making these strategic investments.
Yeah, it's something we talk about all the time, right? These geopolitical and macroeconomic challenges. So talking about it in the near term, some concerns about that. Though AMAT still up about 2.2% here in the after hours. Where should we go, guys?
I don't know, Carol. I mean, aren't you the ringleader
We
here?
should go to Ross.
Well, what happens?
I keep thinking about Bed Bath and Bath and Body Works, just outperformance today. Like some of these retail names,
It's
they
because
get it
of
right.
the frosted coconut snowball hand soap, or
Is this
the
seasonal?
gingerbread bakery.
Is it seasonal
hand
at all?
soap.
It's
What
the
does that
fizzy
smell like?
bath balls that I know Romaine is buying, right?
No, well. First of all, I should just point out our house is full of candles for some reason, not because of me.
Is that seasonal? Or
Yeah,
is that
I mean,
always?
I won't say why, but anyway, and it's not any coconut, fluff ball,
Frosted coconut snowball.
whatever. It's like
Yep.
it was like regular flavors or whatever you call them. So.
Regular flavors like vanilla icicles.
Yeah. In all seriousness, though, I mean, we talk about sort of the trajectory of consumer spending, particularly during the holiday season, that traditionally has always been the meat of how these companies make their money, right? This is sort of when it's Black Friday, because that's when these companies typically would go into the black in terms of profitability. Is that going to be the case?
Well, and this is, I think, going to be very key during this holiday season. Can consumers continue to spend through it? How are they spending? Are they, kind of adding on to charge cards, which could be problematic if we start to see some kind of a recession or job slowdown in the new year? So it is going to be very important.
And just real quickly to squeeze this in, Farfetch shares down about 15% in after-hours trading. And a lot of what they sell is definitely more of those designers, those high-end brands here. So I'm curious to see as to why they're sort of missing on some of their revenue targets, while, say, a Bloomingdale's does well, a Ross Stores at the lower end does well. Where does like a Farfetch and those types of companies?
Well, go back to Neil Kashkari, right? There's mixed signals, like within the market, or I don't know. It's kind of hard to make sense of.
Then it comes down to your management and inventory selection and making sure you can manage that correctly.
Hello, Target, right?
Yeah, sure. You're all getting candles for Christmas, by the way.
Thank you.
We're going to do a shopping tour, and we're going to have some fun at Bed. No, I keep saying Bed Bath and Beyond. They're all so similar.
Do you remember when they had that Kentucky Fried Chicken candle that sold out immediately?
We got to go. We're going to get yelled at really soon. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Quick Take. We do it all, counting you down to the close on this Thursday. We'll see you again, same time, same place, tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Carol Masser. We're live in the Bloomberg Interactive Brokers studio. Let's get to world and national news. For that, we turn to Denise Pellegrini. She's standing by. She's in Bloomberg World Headquarters in the newsroom. Hey, Denise.
Thank you, Tim. And as we've been reporting, Nancy Pelosi is stepping down as Speaker of the House.
For me, the hours come for a new generation to lead the Democratic caucus that I so deeply respect. And I'm grateful that so many are ready and willing to shoulder this awesome responsibility.
And Pelosi says she will continue to serve the people of San Francisco. Senator Michael Bennet, Democrat from Colorado, meantime saying in response, watch for Democrats in the lame duck session to push for the defense reauthorization to help Ukraine, plus extend child tax credits and also pass a Farm Modernization Act.
Those are just a few things that I think we could address in this lame duck session and go out, in a really positive way.
And Bennett also telling us on Balance of Power, the Senate will pass a Respect for Marriage Act by later this week. The incoming GOP majority in the House likely to mean Congress will drop its bid for former President Trump's tax returns. Bloomberg's Nathan Hager has more on that.
Democrats running the House Ways and Means Committee have been in a legal battle since 2019 for the IRS to hand over the former president's tax records. Now, 3 Republicans, Vern Buchanan, Adrian Smith, and Jason Smith, are competing to take over as committee chair. All 3 tell CNBC they would drop the tax return effort. The current ranking Republican on House Ways and Means is retiring Congressman Kevin Brady. He has not endorsed either of the 3 candidates to succeed him. In Washington, I'm Nathan Hager, Bloomberg Radio.
All right, thank you, Nathan. And Ticketmaster is now blaming bot attacks and uninvited fans for the unprecedented site traffic and outages and long wait times during Tuesday's Taylor Swift concert presale. A record of more than 2 million tickets were sold that day. Global News 24 hours a day. I'm Denise Pellegrini. This is Bloomberg.
Add this to the list of crises this year.
I should have done Live Nation as one of my decliners. It fell today after Taylor Swift ticket sales were halted.
Yeah, Denise is talking about this. Ticketmaster canceling Friday's general public sale, citing insufficient remaining ticket inventory.
Are these on the holiday list for your family?
No, but you know what? My daughter was supposed to go to a Taylor Swift concert, and then because of COVID, it just never happened. They rescheduled it for like a year, and then it just canceled. So we kind of say you can kind of go see her maybe anywhere in the world, but I don't know that we really mean that.
That was before ticket prices were so expensive. That was before, you know what? That was when inflation was at 2%, Carol. That's what your excuse. Times have changed.
Well, and what's interesting, Ticketmaster sold over 2 million tickets to Swift's 52-date stadium tour, a record for most ticket sales for one artist in a day. Overwhelming demand on Tuesday's verified fan presale led the site to crash, sparking widespread fan outage. I'm just reading a story that's here. It might be, I'm not sure who it's from, AP or another. But anyway, it's all out there. And I will say, if you ever try to get tickets to somebody who's really popular, it's really frustrating that it's very difficult.
I just sent you the one, Carol, that came out minutes ago from our own Allegra Fradkin and Martine Paris.
Thank you.
Ticketmaster said that bot attacks and uninvited fans drove, quote, unprecedented traffic that caused website outages and long wait times. The site was criticized for excessive wait times during the sale, and Tennessee's AG is now investigating those complaints. The company said on Thursday that only about 15% of interactions across the site experienced issues. What I would love to see, Carol, is just, some sort of commentary around how if you're, you have so much experience in the space, like a company like Live Nation Ticketmaster, how you're still susceptible to bot attacks like this.
I don't know. It really makes it very difficult for kind of the average fan. I consider,
us,
us average fans, to get access to tickets. And so something needs to be done. And if you know anything about Taylor Swift, she really cares about her fan base. And when she feels like the system is taking over, she doesn't like it. So stay tuned.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Applied Materials, the biggest maker of chip equipment, manufacturing equipment, delivered a better-than-feared sales forecast for the current period as supply chain improvements helped offset an economic slowdown. Right now, shares of Applied Materials little changed, up by about 0.2%. Another tech company reporting earnings after the close of trading, Palo Alto Networks, had forecasted adjusted earnings per share for the second quarter. The guidance beat the average analyst estimate, up now by just about 5%. Gap out with total comparable sales for the third quarter that also beat analyst estimates. Third quarter net sales, $4.04 billion. Estimates $3.8 billion. After hours Gap shares, they are now surging by almost 10%. It was a down day on Wall Street as Federal Reserve officials hammered home their resolve to remain persistent in their fight against inflation. S&P today down 12, drop there of 0.3%. The Dow Jones Industrial Average down 7, a decline there of less than 0.1%. NASDAQ down 38, a drop there of about 0.4%. 10-year yield 3.76%, 2-year yield 4.44%. Spot gold 17.60 the ounce, while West Texas Intermediate crude down 4.3%, 81.93 a barrel. The Associated Press says the NFL will be moving Sunday's Bills game to Detroit because of the snowstorm. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Just want to throw in Williams-Sonoma. This stock is down about 10-11% in the after hours. Third quarter adjusted EPS, 2 cents light. And third quarter comp sales were up 8.1% versus an estimate of up 6.72%.
Yeah, I'm looking through the press release. Laura Alber, the president and CEO of the company, said, although macroeconomic backdrop has become more uncertain, we believe our strong positioning, growth initiatives, and culture of financial discipline will allow us to outperform in any environment.
All right. The bulk of earnings is over, but we're still getting to a few of them. And among them was Sonos. We talked about them. Stock was up about 3%, up as much as 6% at its highs today, settling, though, on this Thursday with a 3% gain. They reported earnings last night after the close. Among the headlines that stood out, fourth quarter revenue beat estimates, and analysts finding the print to be solid. So let's see what our next guest has to say. He is president and CEO of Sonos. Patrick Spence is back with us, and so delighted to have you in our Interactive Brokers studio. Welcome back.
Thank you. It's great to be back. Yes.
So, how are you? Talk to us about the business and how things are going.
You know, we've seen things stabilize. So we obviously took a hit back in June in terms of kind of the trajectory in our business. And so since then,
post-pandemic or continuation of a post-pandemic reset?
You know, I think it was more macroeconomic in terms of just generally like what consumers were doing and in the summer traveling and all of those things. And so, you know, we did a bit of a reset at that point. And what we've seen in this quarter is we got it right. Our business stabilized. And we shared a few data points on the call around registrations, which are kind of like the underlying activations of new Sonos speakers that show, in fact, it's kind of, we're pretty optimistic in terms of where we are right now and what we're seeing. And so it's stable. And that's kind of the way we've set our guidance as we go forward. We're not expecting, you know, things to get much worse. We're not expecting it to get much better. So we're just trying to be prudent in this kind of environment.
A lot of competition in the space. You guys are still relatively small, as you point out when you join us, you know, every few months. I'm wondering about who your customer is. And I think about this in the context of what we saw from Walmart's earnings
Tim, it's
the
you,
other day.
it's me.
Well, that's the thing.
Full disclosure.
Yeah, we are. That's true. But I'm wondering, you know, as you try to grow, you know, we see a company like Walmart report results and they say that, you know, upper middle class customers are now trading down and shopping at Walmart rather than Target. We saw that play out this week. Who's your customer, and are you worried about people trading down to less expensive competitors?
We're not, and I'm watching, during a period like this, you want to watch market share very closely, and from what we're seeing, we're gaining share in this period, and I think that speaks to the brand. But we do talk about the more affluent homes that we're in, and again, you pointed it out, you know, we're so small in the grand scheme of things. We're in 9% of the homes that we think we can be in ultimately, so we have a lot of room to go. We don't get overly promotional. We kind of approach this in a very sustainable, kind of steady way. And so we feel like there's lots of opportunity ahead. There'll be obviously ups and downs because of the economy, but overall, we feel like our customer is is stable right now from what we can see, and so we'll be watching it closely. You know, if things change, we'll definitely make adjustments in our business. But right now, it appears our customers are pretty stable.
So you're not talking recession or thinking recession internally in terms of meetings and saying, hey, guys, we're going to have to be thinking about this?
No, we're watching it very carefully. Obviously, not an economist, so I don't know whether recession or not, but it has slowed down. You know, it slowed down. We kind of took that change in June, and but since then, it's been stable. So we haven't seen it get worse. Haven't seen it get better. I do expect at some point it'll get better, but I don't know if that's 12 months, 18 months, you know, from now as well.
Patrick, who's your best customer? Is it existing customers like a Tim and myself and others who already have Sonos equipment, or is it the new guys?
So we added 1.4 million new ones in the last 12 months. We're up to over 14 million homes now. And it's remarkably steady in the sense that 40 to 45% of our sales every year come from our existing customers adding more. And then the rest of it comes from new customers. And so, and the number one way that new customers come into the system is existing customers telling their friends and family. So it's a pretty powerful model in that way, and we've got a good balance between existing and new.
Guilty, I say this all the time, but I'm guilty of, buying gifts, Sonos gifts for my sister and my dad, who are big customers. Hey, Patrick, you're not an economist, you said, but you got to make decisions based on what you think the economy is going to look like. What's headcount looking like in 2023? Have you had to pull back and lay anyone off? Are you planning to lay anyone off?
So we focused on sustainable, profitable growth before it was fashionable. So, we've been profitable for 4 years. We didn't get too, what I say, crazy in terms of hiring, through these periods. We've been investing in a very disciplined way. So I'd say we're kind of zigging while others zag. We're still hiring people. I mentioned on our earnings call last night that we're looking at expanding into 4 new categories. And so we've been hiring people that help us actually do some things and bring some skills we don't have yet today. So I feel like this is one of those times where there's opportunity for us to emerge from this period even stronger. And that's why we've focused on being profitable and being able to be in control of our own destiny.
I want to talk about innovation, but we'll save that for the next block. What does worry you, though? You've been doing this for a long time with your business. I mean, at this point, it's multiple years. You see different cycles. 30 seconds, though. What does worry you?
Our own ability to execute and deliver on the new products.
What does that mean? CEOs and presidents say this all the time.
Well, it's much more about what you can control and what you can do. So making sure we bring out. I know what you mean, but it really is about our ability to get the new products out. Be able to do the things that we need to do because we can't control the economy. We can't control the consumer. All we can do is make sure that we're showing up in the best way possible and adjust accordingly.
Is there better control over those factors right now, Patrick, in terms of supply chains and stuff?
Oh, definitely. On supply chain, it's gotten much better than it was. Last year at this time, we were talking about the inability to get any product and people waiting months. So, yeah, it's gotten much better.
All right, sit tight. Just having some fun with you. We're going to come back with Patrick Spence, CEO of Sonos, here in our Interactive Broker Studio. I do want to talk about innovation and what's in the pipeline. It's coming up next on Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week. We're going to get back to Patrick Spence, of course, the CEO of Sonos, in just a moment. In the meantime,
let's go over to Charlie Pellet because lots, Charlie, happening.
Indeed, we've got it all covered. Let us begin with Gap. Look at that stock surging now by 14% after hours. Gap, the retailer, posted quarterly sales and profit that beat Wall Street estimates, a sign that the apparel retailer is making progress in controlling an inventory buildup that had eroded investor confidence earlier in the year. Again, after hours, we've got Gap up right now by about 14%. Applied Materials, the biggest maker of chip manufacturing equipment, delivered a better than feared sales forecast for the current period as supply chain improvements help offset an economic slowdown. After hours, we got shares of AMAT trading unchanged. Palo Alto Networks forecast adjusted EPS for the second quarter. The guidance did beat the average analyst estimate. Shares of Palo Alto Networks up now by just about 5%. It was a down day on Wall Street today. The Dow, the S&P, and NASDAQ all declined as investors watched Fed hawk circle. We saw the S&P 500 index today down 12 points, drop there of 0.3%. We've got the Dow down 7, little changed. NASDAQ down today by 38 points, drop there of 0.4%. 10-year yield 3.76%, with the 2-year yielding 4.45%. Gold down $13 the ounce at $17.60, drop there of 0.7%, while West Texas Intermediate crude down 4.3%, $81.93 a barrel. As for the overall market backdrop, Charlie Massimo is Senior VP and Financial Advisor at Wealth Enhancement Group.
I think when you look at the market, it's much more positive and much more constructive now, meaning the lows are much better than what we've seen a year ago and a week ago or 2 weeks ago, and the highs are pretty significant on up days. So I think we're starting to see a market that is trying to find direction, but the direction is much more positive than negative right now.
Briefly, Visa promoting President Ryan McInerney to CEO, replacing Al Kelly as of February 1st, and Goldman Sachs upgrading Korea to overweight, Hong Kong to market weight. We'll have more, of course, on Daybreak Asia. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest, Patrick Spence, still with us, of course, the CEO of Sonos. We've been talking about the most recent quarter. Stock was up about, I think, 3% in today's session. So, Patrick, innovation, how do you think about it in this space?
We're playing in a few different areas of audio today, so about 4 different categories, and we are always balancing, do we do something new to raise the bar in the existing category that we're already playing in, or do we expand into a new one? And so we go through really an assessment of kind of where our capabilities are and the opportunities we see in the market, and then we kind of follow our instinct, quite frankly, in terms of, okay, we think this is somewhere that our customers will want to go with us. And our story's really been software eating audio. So where can we bring our system and our software and do something differentiated in a new space, or in the space we're in, like raise the bar, if you will. So you will see us at times bring out things that are new, like we did with the Roam, like a portable speaker, and into a new area, or like we've done with Sub Mini recently, where, okay, we're going to do something different in a space we're already in, and we try then, if we're doing something in the space we're already in, to have a good, better, best approach to our portfolio. So we've got products for a variety of price points and customers, and different aesthetic appeals as well.
Where's the room left to innovate?
This is the thing that I think companies are always looking at and trying to understand, where to go next. And in our world, we really only play in about 20 billion of the audio market today, and our revenue last year was 1.7. So you have a lot of room in the home, but then there's a whole bunch of categories beyond that take us to $96 billion. So as I mentioned yesterday, we're investing in the categories that we're already in, but we're as well investing in 4 new ones that we think hold a lot of potential as well. So we're excited that we're working on those, and we're looking forward to bringing out, those products over time too.
But I mean, apart from getting smaller, batteries lasting longer, audio quality getting better, and you already have speakers for what seem like, to me, as a Sonos customer, kind of every occasion right now.
I've heard that for 10 years, and we keep coming out with ones that reach into new customers and new ideas, and that's the fun part of the job, is to come out with these products that then our existing customers rush out and buy.
What are you working on in the lab? That's what
We're
I'm
not
getting
opening
at.
the vault for you.
Come on.
No, of course not. Our customers will go out and buy, and that attracts new ones, right, as well. So we're always thinking about how are we servicing those existing customers, but at the same time attracting a new set of customers into the products. And so it's this, this balance kind of that we're doing from year to year in terms of what products we're going to bring out and how we attract more people into the system. But it is a long-term view too, right? Like I don't, next year will be next year. For me, the biggest thing is what happens over the next 10 years. And so we're investing in, software and AI and all the kind of stuff that everybody knows is happening in tech to make sure that we can bring out products and experiences that will continue to surprise people.
How do you deal with, okay, wait a minute, 2 questions. Metaverse, do you think about that? And a role for you guys?
I think the whole idea of augmented reality, virtual reality, there's definitely something to that, and audio will play a big role.
Right.
So it's definitely something that we think about today. Don't know exactly what it looks like yet, but we're pretty good about partnering with a variety of different companies and trying to figure out our ways into spaces like that. So we're watching it very closely.
All right. And I asked this of a lot of leaders of publicly held companies. Stock's down 42% this year. How do you think about it, work it into the conversations? How does the board kind of approach? Like, how do you think about that? And there's a lot of names that are beaten down. Meta's
for sure.
down. What are we talking about?
70%.
70% this year.
From its highs.
Yeah.
So I'm curious. It's got to be something you keep in mind.
Oh, absolutely. It has to be, and I think those that claim that they don't, I don't think are necessarily being genuine, because it is a factor, and
Agreed.
all of our people, get compensation through restricted stock units, so that matters. I feel a responsibility to our people and to our investors, and so I think it's important to, in these times, like really make sure you're telling your story clearly. So when we did our earnings call last night, we disclosed some data points that we hadn't before around registrations, inventory, and as well future products, even about the number of categories we're going into, to help people better understand where we're going. So we can always do a better job, I think, of telling our story. And then there are some things that are out of our control in terms of the markets and those kind of things. But fundamentally, I do think you have to be mindful of it, and then you also have to understand you can't control it, but you can control your communications, and then the number one thing you can control is your own execution and the ability to actually deliver, on those things over time and build a real business, right?
30 seconds, Patrick. You're based in Santa Barbara, a very desirable place to live. Not a lot of companies based there. Do you have to overpay to attract talent, or do you underpay because it is such a desirable place to be?
So we, through the pandemic, we've been hiring all over the United States. We pay the same, salary whether you happen to live in City A or City B, as we go through it across the country. Because I figured as we try to attract, the group of like amazing talent, a group of diverse talent that we can, why, if you're doing the same job as somebody in City A versus City B, why would you be paid any differently, right?
Because it costs a lot less to live in City B.
Well, but that doesn't mean you should get paid less for your impact at a company.
Your dollar goes
right?
further.
Hallelujah.
I think it should be.
Agreed,
I'm just playing devil's
right?
advocate.
Yeah, no, I understand, but
I don't know. It sounds like a personal question.
But I do think people should be paid based on the impact they're having in their organization.
What a gem. Come back soon.
Thank you.
Well. Patrick Spann, CEO at Sonos, joining us here in our Interactive Brokers studio.
Let's get to world and national news. Denise Pellegrini standing by. Hey, Denise.
Hey there. Republicans are getting ready to take over the majority in the House, as we've been reporting, and current Speaker Nancy Pelosi says she will not be seeking a leadership position next year.
With great confidence in our caucus, I will not seek re-election to Democratic leadership in the next Congress.
And Pelosi did say she is not retiring. She'll continue to serve in the House for her San Francisco district. House Democrats eager to raise or suspend the debt limit by the end of the year, but it now looks like that might happen because of what's happening in the House. Bloomberg's Amy Morris explains.
Now that the GOP has a slim majority in the House, Democrats want to tackle the debt ceiling before the new Congress is sworn in. But Republicans aren't very interested in a quick deal. Senate Minority Leader Mitch McConnell says it can wait. Democrats don't want to use the reconciliation process. Not only would it take too long, but they'd like a bipartisan deal. But waiting may be risky for Democrats as Republicans have said they want to use those negotiations to finagle fiscally conservative concessions. In Washington, I'm Amy Morris, Bloomberg Radio.
All right, thank you, Amy. And how much is Aaron Judge's record-setting 60-second home run ball worth to you? Well, apparently the Texas man who caught it turned down a $3 million offer for it. And now an attorney for the guy says after a lot of deep conversations with his wife, they have decided to sell this ball through Golden Auctions. You remember a Yankees security official on the night the guy in the stands caught it tried to convince him to return the ball to the Yankee slugger and probable American League MVP we'll see tonight. But the guy refused, and he says he's curious how much it's worth. The auction starts November 29th, so I guess we'll find out. Global News, 24 hours a day, on air and on Bloomberg Quick Take. I'm Denise Pellegrini. This is Bloomberg.
All right, Denise, thank you so much. Carol Master, along with Tim Stenovic, live in our Bloomberg Interactive Broker studio. Okay, so...
Can I just say this?
You can.
Sometimes during our program, when, we're not interviewing someone, Carol takes a look at her Twitter feed.
Sometimes when we're interviewing someone.
And has this sort of, epiphany or like a reaction. And I'm like, okay, what did you just see? And it's always some pretty cool story that she wants to talk about. And we don't often turn to People magazine for these conversations.
People's a great gut check
It is.
on the world at large. Every day, all of us people like just doing things, good things, bad things, what have you. And then sometimes it's celebrities doing things like none other than what?
Well, I was going to say people. It also has to do with animals.
Yeah, so I gotta kind of love this one. Speaks to my heart in so many different ways. So Snoop Dogg, the headline on the People story, Snoop Dogg launching a pet line, Snoop Doggy Dogs, featuring hoodies, toys, bowls, and accessories.
This, according to People magazine today, Snoop Doggy Dogs. It's items also designed to fit cats, Carol. So
Yeah.
it appeals to
Even though it's doggy
cat lovers and
dogs.
dog lovers too.
Yeah, they're gonna, yeah.
Guess where
Doggy
they're
Dogs-
selling it?
Amazon.
Yeah.
Yep.
Makes sense.
Yeah, apparel, toys, accessories, bowls for their furry friends.
Is this on your list for
Designed
Scout?
by Snoop Dogg, yeah, and Hunyak, yeah.
Scout and
Hunyak.
Hunyak, yeah.
It's a
That's your new one.
Czechoslovakian word.
It's your
Means
that's your new
rascal.
dog.
Yeah.
That's your puppy.
We call him Yak.
Okay, so noted. There's some nice photos in here. Dalmatian with a Snoop Doggy Dogs collar on it. Hey, you know what my question is?
What?
How has it taken so long for Snoop to do this?
I don't know. I wonder if Martha's involved. They kind of work together.
They're like big collaborators.
Can I say there was a statement for the line's launch, and Snoop said, "If my dogs ain't fresh, I ain't fresh. These dogs and their apparel are a reflection of the dog himself, so they got to look like the role of a top dog." You dig?
I do.
Cute. I
That's
love
really
him.
cute.
You gotta love him.
He's not the only celebrity. Dolly Parton debuted her line for canines earlier this year.
You gonna get a dog?
No, not anytime soon.
All right. Anyway, Snoop, all in.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We're keeping an eye on Gap shares after hours. They are now up by 6%. Gap out of San Francisco posted quarterly sales and profit that topped Wall Street's estimates, a sign the apparel retailer is making progress in controlling an inventory buildup that had eroded investor confidence earlier this year. Applied Materials right now, they're up by 2.25%. Applied is the biggest maker of chip manufacturing equipment. It delivered a better than feared sales forecast for the current period as supply chain improvements help offset an economic slowdown. A down day on Wall Street, the Dow, the S&P, and NASDAQ all declining. S&P down for a second day. We had Federal Reserve officials hammering home their resolve to remain persistent in their fight against inflation. They're also warning of more pain to come. So here's where we ended the day with the S&P down 0.3%, lower by 12. Off-session lows, I should add. We've got the Dow down 7 points today, little change there. NASDAQ down 38, down by 0.4%. 10-year 3.76% with a 2-year 4.45%. Spot gold 1760 the ounce, down 0.7%. Bitcoin up 0.9%, 16,684. West Texas Intermediate crude down 4.2%, 81.99 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, our next guest held executive roles at IBM, J&J, General Electric, and at GE alone. Among her senior roles, that included CIO for Global Services. She is out too now with a new book.
We're talking about Daphne E. Jones, former Senior Vice President for Future of Work at GE. The new book is called When They Say You Won't, Break Through Barriers and Keep Leveling Up Your Success. Daphne joins us via Zoom from New York City. Daphne, good to have you with us. Congratulations on the book. How are you?
I'm well, Tim. Hi, how are you? And hi, Carol. How are you doing?
Doing well. Nice to have you here.
The thing I like to ask when it comes to people like you who've led such interesting and illustrious careers and then decide to write a book is that moment that you decided that you needed to write this book? Like, what did you experience throughout your career? And that pivotal moment that you said, wait a second, I've had all these experiences. I need to write a book.
Yeah, it's sort of like what you just said. I mean, I have been wanting to write this book for a long time, and I'm a maximizer. I'm a teacher by nature somehow. And I'm always wanting to help make somebody or something better, whether it's a company, an organization, my family, my team, myself. And I said, I can't hold enough microphones in my hand, to be able to reach the people that I want to reach, because I've seen so many women who have been undervalued, overlooked, underappreciated, underpaid. And I found that I was able to systematize how I was able to make it in spite of the issues that I had. And I said, well, how do I get other people to get where I was sooner than I did, and faster than I did, and better than I did? And I said, the book is the best platform for that, not just my holding a mic all the time.
Well, and I think it's timely that we're talking about this because, individuals can certainly deal with some setbacks, and sometimes it's losing a job. And I'm bringing it up because there's some headlines crossing the Bloomberg, and I do want to just bring this out to our audience here at Bloomberg. Amazon.com coming out and saying that there will be more role reductions. So we're talking about more job cuts. Amazon.com doesn't know yet exactly how many roles impacted. This is a note from CEO Andy Jassy about the role eliminations and saying the decisions, Tim, to be shared with impacted employees early 2023. Stocks just a tad higher in the aftermarket.
You'll recall from our reporting yesterday at Bloomberg News that some employees were critical of the company's CEO, Andy Jassy, that he hadn't addressed the employees in a way that Mark Zuckerberg did last week with those mass layoffs.
All right, so some great context there. Getting back to Daphne Jones, who we are talking with, and as we said, former Senior VP for Future of Work at GE, and she's got a new book out, When They Say You Won't, Break Through Barriers and Keep Leveling Up Your Success. What's interesting, too, and I think about women making their way to the higher echelon of corporate America. You did it at GE, but it's not easy. We had a story this week about Goldman Sachs, a payout of over $12 million, and this was to a former partner who alleged troubling behavior by bosses in management all the way to the top. And maybe Wall Street is a different kind of industry. What was your experience, though, as you made your way to the top? Were there some difficult moments?
Yeah, I mean, it's really interesting with the fact that we're talking about women, but when you talk about women and people of color, oh my goodness, now you have an intersectionality that's dealing with micro inequities and other kinds of ways of being mistreated or misunderstood. And so I certainly experienced that. I've been told, I've been shown that I wasn't going to be able to win. And what I've learned to do, and what I think women and others need to be able to do, is when you get that feedback, I have a chapter in the book that talks about taking in the meat and spitting out the bones. There are times when you're going to get great feedback that may be critical about you, and it may feel toxic, but it may just be good for you to understand. And so you have to understand, take that data, take that feedback, not personally, but take it strategically. Take it as data, and it reflect the culture of the kind of company that you want to work for. With the quiet quitting and the great resignation, employees have really an opportunity to decide their own place, call their own place, and decide if this company is the one for them. And so they need to look at the feedback and understand, is this valid? Or is it because the culture is toxic and I need to get out of there? And they have that right to do that.
I have to say, I love the chapter in your book, From Stuck to Unstuck. There's so many great questions, and you ask the question or present a situation, what to do. Things like what to do when your comment is restated by a man